Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, August 12th, 2019. It's a little after 3 o'clock Eastern as I'm starting this video, and I wanted to do an update on gold, silver, and the mining stocks. And before I get into that, I want to talk about some considerations as I get to the charts and the miners and the precious metals. And that would be what's going on or what may go on with the stock market. Yeah, I've traded them. I've been trading for years, and what I've seen at points in time, and it kind of throws some people, is that normally there's a very strong correlation. I'm not going to pull the chart now. You can do it on your own. Pull a 10-year chart, 15, 20-year, and overlay GDX, for example, which is a gold mining ETF, with the charts of gold or GLD, whatever symbol you have, and you'll see there's an unmistakable, unarguable correlation, a direct positive correlation between gold and the miners, except the difference is they don't move up tick for tick or dollar for dollar or percentage for percentage point. Like I say, the miners are really a leverage play on gold. They tend to go up a lot more in percentage terms when gold's having a strong rally, and they tend to fall a lot more in a bear market or correction. So it cuts both ways. So I like to, often trade the miners along with the metals because you get more bang for your buck. Now, where I'm going with this, and before I get into the charts, is over the years I have seen periods where during strong sell-offs, impulsive sell-offs in the stock market, you see gold continue to rise as a flight to safety asset, which it is. Yet you'll see the gold mining stocks at times sell off, and that kind of throws people. And the reason is, one of the reasons, first and foremost, remember that gold is a commodity. It's an asset. It's a physical asset, of gold. Whereas gold mining stocks are simply companies. They are equities. They are stocks. They are companies who have employees, balance sheets, debts, liabilities, expenses. And at the end of the day, they're subject to the same whims of investors, the forces of supply and demand. People panic and they sell. Now, some of those are not, I don't believe, they might be in the S&P 500, but a lot of major indexes don't have many of the pure play miners, but they may be in other sectors, and they're certainly in other mutual funds that track, miners, commodities. So again, so they can get selling pressure from the general public there. So keep that in mind as I'm doing the video here, that I want to start out with the broad markets because we're in a very precarious position. And if that should, if the scenario that I think is about to play out does play out, it means we've got another leg down in the stock market, and to the tune of about, I know I have a lot of lines on here. I lifted this one up a little bit, if I'm not mistaken, today. I've been highlighting in the video. I have a minimum target right now of about 273 or so, give or take a little above that on SPY. I see pretty good resistance, and again, it's just my eye, what I see in the charts. A lot goes into this, kind of flagging action there, come down. I think that fits well with an initial swing target for the next leg down, if I'm right. And from where we're at now, that would be in the S&P 500 roughly 5%. I think it's about 7 in QQQ, which I've added as I just added as a official short trade setup. If you're not familiar with what that is, just go to the trade ideas on the site. If you're a member, you can click on trade ideas on the top menu, and above each category it'll explain what's the difference between a trade setup and an active trade. So we've yet to trigger that close. We came within 1 penny of triggering the short entry, but if we do and things play out the way I think, we're coming down here probably at about that 169.50 level. And that would be, here I'll show you because this video is for members only, so I can show you the official trade right there. I have it about, I set the target like I always do, a little bit above the actual support level there. But to me that looks like a pretty obvious and likely target, again based on all the everything that's happened recently, like I said, everything I've covered in recent videos. So we just need to pretty much take out that gap with conviction. I came in real tight with that target. I set the entry to trigger just a penny below. The reason I did it, twofold. I have a lot of pretty good degree of confidence it's going to go. It's just a matter of time right now. You have dip buyers buying that gap. There aren't, whatever, may have a different view than me, think we might bounce there, and we might. But I think if it gets taken out, it'll happen pretty quick. I think the selling will kick in, the sell program, stop orders will get hit. And so I wanted to get in pretty tight on that one if that gap is taken out. Here, let me get to the 60-minute chart, tell you guys what I'm talking about. There's the gap right there. So this is what I look at. Here's the big old gap from last Monday, a week ago today. And there's that 183.52, top of the gap. We tested it to the penny today. So far, we all see what we want to see. If you're bullish, say, okay, successful test the gap. I'm going to go long here with a stop below. And I will say that's objective. If I was bullish and I thought this trend line would break and we're heading to new highs, I'd be going long. However, I positioned the other way. I'm currently short, and the official short trade will trigger, and as I'll add, if we take out that 183.52 with conviction. So I just wanted to mention a perfect back test so far on QQQ, and here's a great example. Maybe it doesn't trigger, maybe that back test is successful. Anything's possible. Maybe we just slightly undercut it in QQQ and then reverse, but you can see on SPY we already took it out today, and that's why I always say wait for the last of the two to break. If it was the other way around, if QQQ had undercut it already but SPY hadn't yet taken it out, I would then say I'd wait for SPY. So that's that. That's my view on the market, and so there. Let's get into the miners. I'll update that. I'll keep it relatively brief. I've done a lot of videos lately with the bigger picture. Let's just come out here to the daily chart. Gold has just continued to have a relentless bid on it. It's the charts were there, everything that's going on in the financial markets, and again I want to get to that real quick. But we had this, there was a small divergent high right here. It wasn't really clean. It was more flatline divergence right there. I pointed it out, and it played out for more so a correction in time, you can see, than in price, a consolidation period, and then we broke up. Very, very bullish action in gold, and really no different from what I was expecting. I said, that was my first target, 130. We consolidated above it, and I said once, we take that out, we're probably not going to go straight through it. Then the next stop's up here. So let me be clear. I remain longer term bullish on gold still at this point, but I should add right there's a resistance line. It's getting a little stretched. If the market continues to sell down, gold can power on right on through that. Long-term positions, I have no desire to, take all of it out right now. I may lighten up. I've actually raised stops. Some of those were already hit today on miners. I've been scaling out of the miners here lately, and I'll show you why. I want to get to that right now. So there's gold. There's some resistance here. Again, this is my weekly chart. I know I'm talking fast. I want to get everything out to you guys as quick as possible, because the markets, I think, could move fast from here if those levels go. So that's my my what I call final near-term swing target. I'll let the dust settle if and when gold gets there, and then see where to go. But I would expect a reaction, even if we get a momentum-fueled overshoot, which has been the case with a lot of those. So gold, very stretched, but it's in a bull market. It's in a powerful run. Don't underestimate just how far it can go. The last time it became this overbought was at the end of the last bull market. So I want to say that the RSI is I don't want to use the word dangerously high, but it is at decade high levels, and the only time it's ever reached that was at the end of the last bull market with a huge big bear market to follow. What's the takeaway from that? Well, if you aren't already long gold, if you don't have gold, is now the best time to be buying? Probably not. I still think there's more upside to go, but the ideal scenario, I wouldn't go to a full position here. I'll just make it clear. You can maybe scale in, take a little here. A pullback would certainly offer a better, more objective entry. I don't know if we're going to go, I don't think we'll go all the way back to 130 at this point, but that would also offer an objective entry with a stop somewhat below. You'll see a trend line coming into here. So let's just say if we get it, and again, I don't foresee this deep a pullback, but it's certainly a possibility. Let's just say that'd be a nice scale in zone, what I just boxed in there. Otherwise, we continue on up here, and then this would be, I think, a scale out zone to say, hey, powerful run. We're in a bull market. You want to sit tight with your gold for the next year or two or three, fine, but you probably are going to get a pullback. So what I like to do in these situations too is, instead of just selling at 151 or so, if it hits there, once it gets really close, start trailing up a stop and let it go. Sometimes you'll catch that momentum fueled overshoot even if it comes back in. Sometimes it'll just blast right through a pretty well defined resistance level. This was support. After the top was in, gold consolidated. You can see that consolidated for a couple years, and then that was it. And it didn't just limp on down through there. It broke that level with a bang. That tells you it was very technically significant back then, which means it's technically significant now if and when it gets there. So that's why that's been for quite a while my longer term swing target, where trend target, whatever you want to call it, where I'll most likely tighten up stops enough to the point if they stop me out, great, because maybe gold will consolidate there for a few months, maybe it pulls back and I can buy back in at better prices. All right, so that's the longer term bigger picture for gold. Again, I showed you, I think I did, the daily chart. Divergent high, it didn't stop it. It did stop it here. It consolidated, had a little pullback, but it wasn't clean divergence. I prefer to see when there's separation. See these little peaks between the MACD? That's what we have now, but I also need to refer to this as what I call unconfirmed positive divergence. In my book, and again, I don't think this is in any textbooks you'll find out there, but I consider divergence confirmed when you get a bearish crossover on the PPO, meaning this orange line crosses down below the white line, and that way, and it needs to do so below the previous peak. So once it crosses down, it means the trend has changed. It's a bearish crossover, and then you've then effectively put in a lower low. I'm sorry, a lower high. That gives you the negative divergence. See with the line sloping down and prices going up. Until then, it's a momentum indicator. So as I often say, it's potential divergence because we can just keep going up, and guess what? We go right through there, and alas, no more divergence. So that's what I'm looking for there. Big gap below to be filled. This is, of course, the ETF. Gold trades around the clock and futures around the world. But that's that. Let's look at silver, and then we'll get to the miners. SLV, that is. Silver, strong too. Silver has been, since back here, highlighted just a month or two ago, and a couple months ago, saying it looked like it was poised to play a game of catch-up, and it has been. You can see just in that point in time, it's returned a lot more than gold. You've had more bang for your buck on the silver trade, 20% return just a couple months there, and that's just the metal. Now the miners, we'll get to in a second, have just gone crazy, as they usually do. Again, you want to, if you bullish and correct on your call on one, on silver and gold, you're going to play the miners, you're going to get higher returns. Cuts both ways. Think of it as this, guys. Think of it too as trading a leverage ETF. You want to trade, for example, QQQ. Added that as a short trade today. You can short QQQ, or you can buy PSQ. That's a one-time non-leverage inverse, which shorts QQQ. Or you can juice it up, buy QID, which is 2 times leverage, or SQQQ, 3 times leverage, but that leverage cuts both ways, meaning if the trade goes against you, you're going to lose more money quickly, so you just take a smaller position size. That's the key, I believe, to successfully trading volatile securities. Otherwise, you're going to get shaken out every counter trend move against you. So there's silver. It's kind of gapped up here. Potential island cluster top. What would cause that if the market, and this is why I wanted to show you that, maybe my scenario doesn't play out on the market. And a lot of times when you think, and it appears to you that everything's going to go one way, because the charts are bearish and all that, I talk about this quite often. Fewer things in investing and trading are more bullish than a failed bearish setup, whether it breaks out or maybe it's, sometimes you'll see a head and shoulders topping pattern and everyone's watching it and it looks for sure it's going to break down. It either doesn't break down, it goes the other way, or it breaks down and then reverses. So that would be one scenario here, what that I'm getting to, where if the stock market all of a sudden comes in, and look, all it could take is a couple, 1 or 2 tweets from Trump, hey, trade deal with China, it's going great, or blah blah blah, whatever. And you could see, or the Fed coming in with some very dovish comments. I doubt they do. They're not going to do an intermediate rate cut at this point in time, but unless something crazy happened in the market. So what I'm doing is I'm throwing out a couple scenarios. I told you which way I think the market's going, but if it goes the other way, then there's gold and silver are very overbought, as are a lot of these miners, and you have divergence here. I don't have it marked, but you can see this is potential negative divergence. Last time we had a divergent high right there, silver, and you can see that was a huge correction, very very large drop in silver. Then we had a divergent low here, wash rinse repeat stuff. So although I didn't have it marked clearly for you, there's the divergence on the daily. Again, only potential, just like gold. A lot of volume coming in. It's bullish, but this also, here's a big candle there. That could be a near-term buying climax. And silver's coming up on some pretty decent resistance. These are both resistance levels around 16, kind of trading around it. 1637, and then let's look at my weekly chart. I'll zoom in. There was the last bull market right there in silver. Here, I'll go over here and do this a little slower for you. Bull market. This was the last bear market in silver. Silver kind of bottomed, mostly sideways. It retested those lows and did so successfully back here in late 2018. But then the bullish breakout here, and this was whenever it was highlighted as playing a game of catch up. There was the bullish breakout. So you can see these levels. You have to zoom in real tight, and here's at 1634. So I do see some more upside in silver before it hits some pretty decent resistance, and it could continue to run from there, because remember, it's just, I believe it to be in an early stage of a new bull market, and it's really not far off its lows, relatively speaking, again, if you look at that. Also remember this, that silver is more of an industrial metal than gold. They're both precious metals and industrial, well, they're used for jewelry, as precious metals, collectibles, flight to safety for gold. But of all between the two, gold is much more a flight to safety asset and has that precious metals component. It is an industrial metal as well. But during times of market volatility, people usually flock to gold more. Silver, the gold-silver ratio got out of whack. There's a ratio. Stockcharts.com will give it to you. Other charting platforms might. And that's it. So that's what happens. The ratios get out of whack, and one or the other will play catch up to the other metal. So there it is. Gold I already covered. Silver I covered there on the weekly. And now let's look at the miners. SIL. Well, let's start with, well, I'll start here because I did. Silver miners ETF. This was my target from back here. You can see it's been hit now. So I have SIL, which is the silver miners, more of the seniors. Not we have the juniors as the official trade, but I see a lot of resistance, a lot of reaction points at this level going back for years, and that's a resistance zone. So not quite overbought yet on this weekly chart, but getting there. Again, longer term, nothing's changed. I see a bullish looking chart. I see a divergent low on the weekly. Last time we had a divergent low was back here, and that was that huge rally in the silver mining stocks, and you can see this one pales in comparison to that one. So we could keep on going. I'm just laying out some scenarios to watch, and keep all this stuff in mind with the stock market and everything else. Let's go to GDX for you. You know what, before we leave still, let's go to the daily chart. Let's move this divergence line like this. This will look a little clearer right here. That one continues there, and we just have now divergence as we approach. There's a resistance level / target right there on my daily chart around 3013. You can see it was a shelf of support right here. We broke it, came and back tested it right there, and there's actually support all through here. So there's silver, again, overbought on this daily time frame at resistance. So the risk reward right now, I'll be very clear, I think the risk reward is not very attractive. It's starting to diminish, if you will, in the miners. I don't care to short them right here. The trend is too strong, but I'm certainly have taken some profits, and on the remaining positions, fractional positions, whatever I have stops below those, and who knows, I could be out by now on most of those. GDX now, let's go to that, because a lot of you trade GDX, as myself as well. There's the gold mining ETF, GDX. There's a negative divergence right there. We've kind of sliced through. We had a breakdown there. You can see below this trend line, but it proved to be a whipsaw signal. We popped up, but we put in a divergent or another divergent high. Let me look at my weekly chart, show you where we're at. So I said, until my next target at 3150 or so, there's a little more upside. We fell short so far, but I still have confidence we'll get there. But again, they're getting a little stretched. And as I said, if we get a broad-based market sell-off, here you can draw this trend line on the weekly. Ideally, you want to see GDX stay above that trend line. And if it can get up there, and if you were looking to take some profits on your miners, I think that's objective. I had this target here for a long time. I see a lot of reaction points along the way, and whether we overshoot it or not, maybe we reverse just shy, I think it's a pretty good area to take some profits if you've caught the bulk of this run and recycle in. Again, you don't have to sell there. It's up to you. One option, if start at this point and maybe going up, its trail stops up. So if we blast right on through there, you just keep every now and then lower stop. If you want to know where, it's up to you, but I can tell you this: if you run a 1, 2, even a 3% stop below GDX, unless you're in a very strong trend like this, and might be, you're probably going to get stopped out because it's a volatile little thing. It usually swings up and down that much per day, so it's probably only a matter of a week or so, maybe right away before your stop gets hit. So sometimes you have to use a little wider stop, but again, it depends on a lot of factors: your cost basis, what you're shooting for, and all that. Let's go to, did I cover daily? Yeah, I already covered the daily on GDX. And the other one I wanted to cover was SILJ. That is our one of our official trades. There's the weekly chart. This is the Junior Silver Miners ETF. And just a beautiful chart. Again, still longer term bearish. I'm sorry, I'm looking over here. I'm going so fast. I want to get back to trading, guys. You had a negative divergence right there, divergent high. You broke that trend line. I should have drawn it a little tighter. That marked the end of that run. And we were stair-stepping lower, but we had a nice downtrend. In fact, we had two downtrend lines that came in together. The breakout was that big green candle, and boom. So where we're at, well, we took out my 1017 target, and we're in no man's land right now. We're between that and my next target up here, about 1135 on the weekly chart. We're very close to the second target. We already hit the first target on that trade back here at T1 at 969. And so far we came very close the other day. If you look at the candles, in fact, even today we hit a high of 1079. My target's at 1084. Very, very close. You can see we're below the line, but I have the line at 1096. Remember, I always set my price targets a little shy, because if all eyes are watching that level, and it's a good level, the sellers are probably going to step in early, especially if you're very overbought as you start to get there. And in this case, you have divergence. So I can tell you this right now, as I just told you already, I think it's a good time to tighten up stops, maybe even outright take profits. I may have to lower that because that target may be missed. We've come so close to it. And look at this. 1, 2, 3. Last 4 days, we've hit about, well, there it is, right there, about 1079, and I have that target at 1084. Remember, I set this target when we were way back here, wherever, I can't remember where we entered this trade, probably on this breakout here. So, sometimes you have to adjust and adapt once you get there. So that's why I wanted to get this video out. Whether I get it in time to change it and make an official, revise the target or not, you get this video and then you can decide what to do, because the only thing that sucks worse than getting stopped out on a trade from the get-go is having some big profits and then watch them evaporate. So I usually do a pretty good job of identifying these targets and pretty much nailing them within pennies, sometimes the exact penny of where it reverses. This one right now, like I said, and we could get another thrust up, but that may be it. It seems like it's stalled out here. At least it has for the last 4 days at about, like I said, 1079, 5 cents shy of that price target. So that's that. And then let's go over the top picks I had. Back on July 9th, I posted when somebody asked about some gold mining picks before the miners started taking off. That was just before then. It was just over a month ago. I said here, by the way, I think for the next leg up, I think there's a decent chance that silver might outperform gold, and at the very least, some of the silver miners, such as these four, FSM, AG, EXK, and ASM, are poised for some very profitable trend trades. Weekly charts below. So here was FSM, the first one. That was at 284 at the time. You can see I had a target of 411. An arrow break means that's where I expect a reaction. That means a reaction I define as either a consolidation on that point or a pullback, and then a continuation of the trend. So that was 411. Let's go to where it is now, and that's FSM. That was a weekly chart, and we are at 409 right now. So where was that? Okay, we'll start it at 284, or highlighted there. So that's close enough. 287. That thing has already run up from where I posted at 59, about 60%, and now it's pulled back. This is what I call, if you're new to the site, I call this a momentum fueled overshoot. It's a term I made up, meaning we have a tremendous amount, a lot of velocity. In this way, upward velocity, or momentum, I should say. You tend to overshoot the actual resistance level that's going to proved to be the one that the stock consolidates on or has a reaction. It works both to the upside and downside. So you can see a very strong near vertical trend. So we overshot it and now we've come back in. So that's what I would have expected. What does that mean? Well, there's still at that target from a month ago, 60%, from the highs. And then on the daily chart too, you have negative divergence. I had 408, close enough. I had 408 and 411, and it's right there right now, my 408 level, negative divergence. So this one looks like it's going to come back in because it's overshot my target. I'll say this, and I said it for a member in the trading room and asked about it for an update. It's a very good support level. It was resistance, that's why it was a target. Resistance once broken then becomes support. However, based on this, the support's holding so far. We overshot a little to the downside today, but I think especially if we get that pullback, a little deeper pullback in the minors, it's probably going to come back in. And if it does, this would be the first likely target. That was a resistance on the way up, and now it should act as support. We could certainly go a little bit lower there, so maybe you look to buy that one. I just wouldn't be adding here, even though it's a breakout and a back test. If you do add, just keep your stops tight. And again, if you're longer term and you're willing to ride out the ups and downs, because sometimes if you get out of these guys early along the way, then you miss the next leg up. So there's food for thought there. If it hits my $6 target, which I think some point in the coming months it will, there's another 45% upside from there. All right, so FSM was one of four I mentioned. AG, let's go back to that post. Okay, AG I had highlighted at 791. First target at 829. It was flagging just below that, going up here to about 1344. So 791 on AG, and it's now at 1066. That puts it at right there, 792. So that one's jumped about 42%. It is halfway between my, above this target and to the next one, but I will add right now a line right here and show you there's a key reaction high. In trading technical analysis, you want to look for this, what you call a reaction high, a distinct high separated there, and then you look back and here's another series of reaction highs there. If you look closely there's a few candles that were served as support right there. We bounced off that level, and again I see a couple more reactions there. Oh, and a big reaction there. So actually I feel pretty good about that target, and there's another one that I think will have a reaction here. Whether it's a pullback, if so how much, don't know. Could be sizable. Again, it depends on what the market does. Oh, and on that, let me loop back. In the beginning of the video, I said that if we were to see a very impulsive correction, a big drop in the market, another leg down, that you could see gold continue to rally, yet the miners might come under selling pressure for that reason. Well, the other thing holds true as well, or inverse, I should say. The inverse holds true as well. If the stock market rallies from here, you're going to then see most likely a money coming out of that flight to safety bid in gold and silver. So then gold and silver are going to drop on their own, and the miners will almost certainly follow them and follow them more to the downside. So I wanted to give you those, those two potential scenarios right now. So it all ties into the reason I'm doing this video right now. We've hit our price targets. A lot of these stocks have that were laid out over a month ago. Very quick, powerful gains and short order gains that would take you years to make in the stock market, especially going forward. So it's a prudent time to either tighten up stops or book some profits, and at the very least not very objective in my opinion to be opening new positions now if you didn't catch this rally and you have FOMO going on right now. FOMO is a fear of missing out, FOMO. So like I said, try to resist that urge. And then you can see clearly 1344. It's where I think we're going over time. It's a pretty good level, but like I said, probably not going to go straight through there. And finally, there were two more. You know what? Before I leave AG, let me just look at it on the daily for you. Yeah, 1094. I have a level there as well. You can see on the daily chart, it's that same reaction high I just covered on the weekly. So never mind. Let's just go on to the next one here, and we'll wrap this up. I did FSM already. EXK. Okay, here's that chart posted back on July 9th with the top 4 picks. 316 had a breakout. We were all the way down here at 198, so that's coming up here. We top of the wedge, breakout, reaction around 316, give or take, and then move up to 584. So that was then. This is now from 198. We went from right here. This sucker has rallied about 45% or so. And I showed you actually on the weekly chart. That was we were looking at there. So let's see. So basically this one's just broken out, but it had an overshoot, came up, shot through the wedge. It may want to come in and back test, but it also, looks good longer term as a breakout of a wedge. But remember, birds of a feather flock together. So if the sector, if the miners, GDX, SIL, SILJ, GDXJ, of all those guys, especially the metals, correct, this breakout's probably not going to go very far. And in fact, it could either fail, come back down within the wedge or below the trend line, or maybe just back test a little bit. But the problem with a back test of a trend line, a downtrend line, is trend lines come in at different prices every day. Downtrend lines come in at lower and lower prices. So if we back tested for a few months, you're going to be drifting lower. But either way, still looks good longer term. And this one, like I said, it's not even at that target yet. So maybe looks a little better than some of the others that I showed you that had little bigger runs and have already hit resistance levels and targets and such. All right, one more to go. And that was this one. This one I mentioned being a little more speculative because it was lower price, but with risk and return go hand in hand. So ASM, again, these were all weekly charts shared back a month ago. Nice clean downtrend line, bullish divergence, everything I like to see. Had it breaking out from 57 going up to that 72 level and then 112. That was then, this is now. So we come up from 57 and it's run about 34% or so and right back down to that 72 target right now. A little brief momentum fueled overshoot and right on there now. So there's another one at resistance. Next resistance would be the downtrend line and then that 112 level. Okay, that that covers it. So there's my thoughts. There's some levels to watch and some strategies on how you might want to trade it. Like I said, maybe protect profits, trail up stops, raise them hard stops, manually ratchet them up. That's up to you. And like I said, longer term outlook still good. Near term, the risk of a correction. Especially if you get those other reasons and the fundamentals in the stock market and gold and everything else that start to play out, those would be the things that you might want to look for. And it could also give you a heads up. For example, the stock market breaking support, starting to take the next leg down sharply. That's probably going to continue to give gold and silver a flight to safety bid. But if you see the miners underperforming, it's not necessarily that they will go up with gold and silver when they're very overbought like this. And again, the technicals are sort of against them at that point. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.